With discounts on the rise and demand on the fall, where does Tesla stand right now and should you buy? Stay focused as we go through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. Tesla has increased the discounts it was offering on its vehicles in the United States, indicating a drop in demand as inflation crushes the average person who makes 5 figures a year. One analyst, however, suggested that as long as the Q4 target is hit, the short-term discount will not be a problem. But the price action does not agree with him because it fell by about another 10%, going from a price of about $155 to the current $138 after Wednesday's trading session. In our opinion, Twitter and Elon's relation has caused a lot of harm to Tesla, but it's too early to say anything. With all that in mind, let's analyze the charts. So as you guys can see right here now in the 1-day chart for Tesla, and as always we'll first analyze the 1-day chart, then the 1-hour chart, and to end it off we'll get to the 5-minute chart. But right off the bat we can see that we're down by about almost a percent on the pre-market, and at the same time we have to see that we were falling down in terms of price. Let me get the brush. And at the same time we were rising in terms of volume, and this is definitely not a good sign, right? This just indicates that all of this volatility is completely real and none of this is market manipulation, right? So what's going on is that first up, of course, the demand problem, right? We've seen that they started offering discounts like $7,500 discount, and they even doubled the previous discounts, right, on some of those vehicles, like of course the Model 3 and Model Y. So why are they doing that? Now, first up, we have to clear a few things up, right? Is Twitter an obstacle in Tesla's way? Not exactly, but there are a few things that we need to note, right? First up, of course, the way that Musk is dealing with Twitter is, now we've always heard about this, that Musk is a problematic CEO, right? And a lot of publications even went so far ahead as to say that if Tesla ever goes negative, Elon will be the sole reason for that. And why is that so? Well, because we've already seen that there is some controversy surrounding him on Twitter itself, that he was in apparently a Spaces call, I believe, on Twitter, and he apparently, allegedly, right? I haven't actually heard the recording, but I did see it being spread on Twitter a lot, and where people are claiming that he shouted on an engineer and he discarded his stuff, right? Whatever he was trying to say. And that, of course, I'll try to find it and link it in the pinned comment so you guys can see it for yourself. And these things are just really not good for the company's PR, right? First up, investors will definitely get scared, I would say, for the fact that which company, are they investing their money in? Now, if that company is not being diligent with their money, right? If that company is not completely taking responsibility, and responsibility to its truest form would mean that the company and the CEO and of course all of the people involved with the company would try to, they would try their best to make sure that your money is in the safe hands, right? It's in the right hands. And of course, if I, as an investor, look at this, for me, honestly, it's a good buying opportunity because we've seen that I already gave you guys a few levels in my previous videos where you guys called me a shorter. But anyways, I'm not a short seller. I'm not siding with the shorts. I don't even trade Tesla for that matter, right? I just analyze it because it's fun, right? We did see that Bank of America gave a level between $182 and $186. $186, right? And the next level was somewhere around 160 or 150, I guess, somewhere around here. And naturally, the next level would likely be around $120 in my opinion. But the real question is, are we going down there? Well, we can't really say anything about that, but if we look at the trend and the patterns, sure, we might head that way. Is it a bad thing? In my opinion, not. It might be a great buying opportunity. And of course, if we go by Cathie Wood's target, and I know that Cathie Wood is not great, right, in terms of her predictions all the time, but if this works out, she had a prediction that Tesla would probably hit $6,000 per share in, I believe it was 2026, right? Or at least that would go up by 6,000%. Of course, if they do splits and stuff, the stock price will come down a bit and be a bit more affordable, right? So That would be a good thing. And of course, if it touches $120, that would be a 50x return over the period of like 4 years, I guess. Yeah, 2020 is pretty much over now. And now, of course, if we talk about my price prediction and my analysis, I am kind of bullish on the stock. Now, there are two things to consider, right? For, of course, the investors who don't like taking a lot of risk, I personally would stay away from Tesla. And for those of you who love taking risks, definitely Tesla might be the pick for you because, of course, it has great potential on the upside. And Twitter, or Elon Musk, why did I say Twitter? Elon Musk is as crazy as it gets, right? And not in a bad way as such. He might be crazy in a bad way sometimes, but of course, other times he's pretty good at it, right? So that might be a good thing, and it might work out in his favor, and of course, in the favor of all of those other Tesla investors. So that is definitely a big possibility, and it's definitely a bigger possibility than Tesla going down to like $50. So I personally think that Tesla going to $500, wait, $500, Tesla going to $500, in my opinion, is a more believable thing than Tesla going down to $50. And again, that's my opinion, right? Not financial advice. But at the same time, my price target is not exactly $500, but for a 1 year period, I would say that $300 is a safe target. And of course, if we get down to 120, that would be a great buying zone with the $300 target in mind. Now, of course, we'll have to jump on into the 1 hour chart so we can see a bit more what's going on around here. And now that we're in the 1 hour chart, we can, right off the bat, we can see a straightforward bearish trend. It's pretty obvious, right? A pretty obvious, pretty generic bearish trend, right? We did make a double bottom over here at the point of pretty much 157 or 158, I believe, right? So we did get hovered around here a lot, and it did serve as a good support and resistance as well. We did get another resistance around 160, so that was again a good zone. And below that, the current support was around 138, I guess, 137, 138, and we've fallen below that, so 135 would be the next best bet. $135, and after that 132, below that 130, and I don't think we'll fall below that, right? Of course, um, I do think that Tesla might go to 120, but over a period of at least 6 or 7 days, right? So before the the year ends, and a lot of people even might do their holiday stock shopping, right? A lot of people do that. So once that happens, Tesla might go up as well. But I personally am thinking that before Christmas at least, or until this weekend, so today and tomorrow, right? So Thursday and Friday would probably be a bit of another dump, and we might just hit $130 in these 2 days. But after that, of course, if things change for good, then it's all well and good. And of course, I believe that the 1 hour chart is, it doesn't serve any more purpose than this. So we'll jump on into the 5 minute chart. And now that we're in the 5 minute chart, this is where stuff gets interesting, right? First up, we can see that during the end, the end hours of the market, over here, let me get a trend line. We were in a constant bearish trend, in a clear bearish trend. So this kind of, provided us with enough data to assume that the next day would be a gap down. But the real question is, where will this gap down take us, right? So there are two scenarios. First up, if you have support levels, let me just, now I'll give you guys a rough idea and you can implement it on your own. So if you have, let's say, 4 levels, right, two are support and two are resistance, and one of course is your current price. Let's say you're at 144, you have a support at 142 and another support at 140, resistance at 146, and another one at 148. Now if you get a gap up between 144, 145 and 146, kind of squeezed into this range, then it has a good possibility that once the volumes kick in, it will go over here, hit a stop loss, a major stop loss, and then start going down, and that would probably be a red, or not even a red day as such, but it will fall quite a lot for the first few candles at least. And on the same case, if we go from 144 to a gap down around 142, probably in the 143, 142 range, then there is a great possibility that we'll just hit a strong support over here at 142, and then we'll start going up and at least build up a small bullish trend in the first hour of the market. So I do see that happening over here, but at the same time, the real problem is where is our support, right? So first up, we're at 137.5, and there are a few unimportant support levels, I would say, right? So 137 is a psychological level, but it's not that important, right? 136, sure, it might be a bit important, but not that much. The next one right off the bat is 135. So as long as we get a gap down between 136.5, or rather just 136, I would say, and 135, that should be good enough to set us up for a at least an early market bull trend. So let's quickly see what's going on in the pre-market, and that might be able to help us understand what's going on in a better manner. As you guys can see, we did continue this bull trend that, this bear trend that we got over here. And it's pretty common that once you get a bearish trend, you get a pullback, which we got in the aftermarket. And after that, of course, and not exactly a pullback, a pull up, I would say, probably something like that, a breather, right? So over here, we can see that we're going down in the pre-market. And even if, as long as we don't break, we don't get real close to 135, as long as we stay around and above 135.5, we should be good, in my opinion, and we should get a bullish trend today. But then again, the markets are unpredictable at the end of the day. So remember that this most definitely is not financial advice, and you should always do your own research before you trade. And of course, if you enjoyed this analysis, be sure to hit the like button. If you did not enjoy it for some reason, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos. And as always, I will see you guys in the next one.